This is the introduction to order flow, which is part of the core execution module for Pivot Boss Masters. Let's get started. Order flow is absolutely the most important market-generated information available to active traders, and the ability to read order flow is an essential skill for any professional trader in today's trading environment. It's our final level of analysis that will allow us to execute trades in the market with utter confidence. If you want to compare order flow analysis to technical analysis, basically technical analysis helps you analyze the past, while order flow helps you analyze the present. It is order flow that moves price each and every time, unlike technical analysis and unlike fundamental analysis. Order flow is simply the flow of orders that are being transacted in the market at the present. Order flow analysis is reading the flow of those transactions and future orders to reveal the unfolding story of the market. This analysis allows you to understand where the market participants are positioned right now so that you may more accurately predict future price movement. In essence, order flow analysis offers the most accurate way to read what's happening in the market right now. And I'll underline that for you. Order flow analysis is the most accurate way to read what's happening in the market right now because it is the auction. Order flow analysis is the raw data of the auction as it comes through unfiltered to you. It shows you where the passive market participants are placing their bets. It shows you which levels the aggressive market participants are trying to attack, and it shows that constant battle between market participants and helps you piece together the puzzle of price and where it has been, where it's trying to go, and where it's likely to go from here. Reading order flow is what gave floor traders such a huge advantage in the trading pits for decades. It was the floor trader advantage, having advance notice of when the big orders were coming down the pipeline from the big institutions. Floor traders were able to see the flow of these large orders from institutions, big banks, traders alike, and they were able to lean on these orders to bid with the bidders, offer with the offerers, and squeeze the losing side out of their positions. That's what trading is all about. And that's what order flow allows you to do. It allows you to see those orders that influence price. It's not looking at one lot or two lot trades. It's looking at those 100 lot trades, those 1,000 lot orders, those 10,000 lot orders come through the market and tracking where are they entering the trade and basically seeing are they stuck, are they trapped, or are they influencing price behavior. It's when you read that battle between the aggressive and passive market participants where you can begin to unfold the story of where price is headed. It's the most accurate way to predict where price is likely headed. And that's why floor traders were so profitable for so many decades. They were able to see the large orders come through, and they were able to front run those orders and join in on those moves. However, this was also the reason why most floor traders failed to make money when they moved off the floor. You may have heard before that floor traders aren't really good traders. And yet, on any given day in the 80s or 90s, they were making a six-figure payday on any given day, on a good day, or more. So why is it when they left the floor and started trading behind screens that they stopped making money so easily? It's all order flow. They didn't have access to the order flow anymore. They weren't able to see where the big trades were coming in, who was positioned where, and who was getting trapped so easily. Because you know what? It hadn't been invented for screen traders yet. Trading online has only come along over the last, 10 to 15 years. And over the last 8 to 10, as raw data has become more and more precise with tick, tick, tick data, and being able to filter the orders the way you can to look at certain views of the market through certain types of charts that reveal this data to you unlike any other charting that you've been able to do before. For example, candlestick charts. They show no form of data other than high, low, open, close. But what order flow does, it actually allows you to see inside the bar. Allows you to see the actual trades being transacted at those price levels, what those size of those orders are, who's trapped, who's not, who's influencing price, so that you can join the winning side. And that's what's happened over the last 8 to 10 years as trading platforms have become more advanced. They've offered tools specifically designed to help you read order flow. And that is immense. That is a huge advantage for the retail trader, because now they're getting the same type of data that traders on the floor are getting for the most part. It didn't used to be that way. But now that we have this data, trading platforms are allowing us to view this stream of information through revolutionary charts that allow you to really see the auction unlike ever before. So what is order flow? I've summed it up very simply here. Order flow is all the orders being transacted right now. Order flow is the present. It is right now where a market participant's putting their money to work right now in the market, who's absorbing where, who's aggressively trying to push price in a certain direction, who's trapped, who's not. That is order flow. Order flow analysis is reading those flow of transactions and those future orders to predict future price movement. Again, order flow analysis is the most important market generated information available to traders. It is the most accurate way to determine where price is likely headed in an upcoming period of time. It is the market. Order flow is what moves price. And it is this type of information that we as master traders must master if we are to reach the trading heights that we want to get to. It's very difficult, in my opinion, to not have a great basis of order flow analysis in your trading and still be able to consistently make money. You must be able to understand order flow analysis, the types of market participants, who's positioned where, and how that affects future price direction. Order flow analysis, again, is what you need to incorporate in your trading to become elite. The good news is it's very simple to see what's going on, and all it takes is practice and practice and practice to read and watch, and from there you will be able to see the market with amazing clarity. So the benefits of order flow analysis: number one, it helps you see the auction at its most accurate level. In the most detailed way possible to see the market's orders, you're able to see that action on your screen. It is the most accurate picture of the market's auction. It helps you identify the market's current bias. It helps you see where market participants are positioned. It helps you spot and confirm exact reversals. Now, if you've attended webinars before, and I've done that, and I've given webinars and talked about spotting exact reversals, or picture perfect reversals, or V-bottom reversals, etc. I have never seen in my entire 15-year trading career a way to spot an exact reversal as exact as the order flow analysis that I've begun to use and are now teaching students. That analysis, those exact reversals, are the cause of those reversals and allows you to get in on the tick low, 2 ticks off the low, ahead of anyone else. It helps you confirm retest entries where absorption is occurring, so that you can get in with a precision limit order at the absolute best price. And if you're wrong, because the market, something can happen immediately and in a split second, big thrust of orders comes through, or a large market participant swoops in. So things happen. But using order flow analysis, you're able to enter the market with the precision of a surgeon's scalpel. Basically, you're entering the market like a scalper, and then we're going to allow our professional trade management approaches to manage the trades like day or swing traders. That's the goal of Pivot Boss Masters. Enter the market with the precision of a scalper and manage the trade like a day or swing trader. Order flow analysis helps us do that. And lastly, what's great about order flow analysis, it's not just for executing trades, it's also for real-time trade management. I know I'm in a great winner when I can read the order flow after I enter the trade and it confirms my trade behind my entry, because I know exactly what's going on the back end. I know which players are in there defending my trade and which ones are trying to take me out of my trade. And it is the absolute most accurate way to read the market's auction. So what are the components of order flow? Very simple. The two components that make up order flow are aggressive and passive market participants. And understanding how these market participants basically interact and reading the story of the auction through these participants is what helps you unlock future price direction. An aggressive market participant is one who uses a market order to transact a trade. It's that simple. Anyone who pushes buy on market or sell on market is an aggressive market participant. Anyone who uses a limit order is a passive market participant. It's that simple. Aggressive participants hit the bid or lift the offer, and passive market participants use limit orders. Now, an aggressive buyer will lift the offer by transacting a market order to buy on the best offer, which means they're hitting buy on market, which means they're going to transact at the best offer. An aggressive seller will hit the bid, which means they are looking to place a sell at the market on the best bid. So these market participants are considered aggressive because instead of choosing location or letting the market come to them, they'd rather pay the one tick spread to enter the market immediately because they do not want to get left behind. They want in the market now. So they pay the one tick spread. They get in at a price that's not as good as they could have had they been patient with a limit order. But that tells you something about the mindset of that market participant. Because if that market participant is able to influence price, that says something about the current market. If that market participant becomes trapped in their trade, that gives you invaluable information about which way price is headed. Passive market participants, on the other hand, use limit orders. And a passive buyer will place a limit order to buy below last price, which is called a resting bid, and allows the market to come to them in order to execute a trade. While a passive seller places a limit order to sell above last price, which is called a resting offer, and allows the market to approach the limit before an execution can be made. So basically, if you're a passive market participant, sure, you think the market is probably headed in that direction, but instead of getting in at the market right now, you'd rather let price come back to you before you trigger that entry. You're a passive market participant. So these are market participants that like current price, but just aren't willing to put the money up at the current price because they'd rather price come back to them. So order flow analysis is basically reading the developing storyline between aggressive and passive market participants. And at its core, the auction is a constant battle between passive and aggressive market participants. Passive market participants use limit orders to absorb aggressive market participants, while aggressive market participants look to sweep these limit orders to influence price to the next price level. This battle between passive and aggressive market participants is what moves price each and every time, and unlike any other form of market analysis. If you become an expert at reading order flow, you'll have a long and prosperous trading career. So this is extremely important analysis. If you can read the story between passive and aggressive market participants, you will know where price is headed each and every time, because it is what influences price each and every time. You cannot say that about technical analysis. You cannot say that about fundamental analysis. For example, technical analysis is analysis of the past. So you're looking at historical support and resistance levels. Sometimes those support and resistance levels work, and sometimes they don't. When they do, and when they don't, it's all because of order flow, if that makes sense. When they don't work out, if a technical analysis pattern does not work out, it's because there wasn't sufficient order flow for that case to turn out. If a technical analysis pattern did work out, then it's because the order flow supported that theory. So underneath every single move in the market is order flow. And here's the order flow playbook for the most part. This is the standard way to look at it. If passive buyers absorb aggressive supply at a price level, price will reverse higher. This is called absorption. Absorption is a major concept. And if passive buyers are absorbing aggressive supply, that means I'm a buyer with a limit order and I am absorbing aggressive supply. What does that mean? Aggressive supply are sellers that are hitting the bid at the market to enter the market short right now. So passive buyers use limit orders to absorb that supply at a given price level. If they absorb all the supply and withstand those aggressive sellers, price will move higher. If passive sellers, on the other hand, number two, absorb aggressive demand at a price level, price will usually reverse lower. So passive sellers will use limit orders above price and will look to absorb aggressive demand, meaning aggressive buyers entering the market at the offer. They're lifting the offer. So aggressive buyers are lifting the offer, entering the market at the best offer. But passive sellers are using limit orders above price to keep price down and absorb that demand. If they absorb the demand at that level, price will reverse lower. Supply and demand. If aggressive sellers sweep the bids of passive buyers, then price will tick lower. That's what pushes price down. If aggressive buyers, on the other hand, sweep the offers of a passive seller, then price will tick higher. It's what influences price higher. Now, when you have trapped aggressive participants, these are what fuel amazing reversals in price. These single-handedly are what fuel price in the opposite direction. So if you have trapped aggressive sellers, for example, if you have a seller that sells 1,000 lot at the low of the day and price doesn't go lower, these sellers become buyers because they are forced to get the heck out of their positions, and that's what fuels price higher. Likewise, trapped aggressive buyers become sellers and fuel price lower. So if a trapped aggressive buyer buys a 1,000 lot on the high of the day and price does not tick higher, they become trapped, and now they are forced to liquidate their trade and price will push lower. So that trapped aggressive buyer becomes the fuel that pushes price lower. This right here is what moves markets. If you print this out, put it next to your monitor, read it, and understand these, especially numbers 5 and 6, if that's all you do the rest of your trading career, you can make money just doing this here. Especially with some of the order flow analysis that we'll be doing down the road with our footprint charts and other tools. So in summary, let's tie it all together here. Order flow analysis is king. Order flow analysis is what moves price. And understanding this form of analysis through and through and becoming an expert at it will virtually solidify your position as a consistently profitable trader. It is this type of analysis that some of the best traders around the world use in order to identify the best entries and have the smallest risk of any trader out there, because they're able to identify razor sharp precision entries based on this type of analysis. Order flow is orders being transacted right now. Order flow is the present, and it allows you to see inside the auction with greater detail and greater clarity than ever before. Order flow is the most accurate form of analysis. And again, if you master this form of analysis, you will always have the best idea on where price is headed. Order flow is what moves price each and every time. It is behind every single move. And if you look at price sometimes and you say, why did price reverse there? Sometimes it may be a floor pivot. Sometimes it may be a support level. Sometimes it might be an LVN. Sometimes it might be a fib level. Sometimes it might be a harmonic level. But you know what? Every single time it is order flow. Traders who are experts at reading order flow will have trading longevity. So this is going to be an area of emphasis for us, along with the other tools and ideas that we've learned up to this point, and we are going to continue to see the market through the eyes of order flow using auction market theory and volume profiling as our core analytical tools. And that does it for the introduction to order flow component of the core execution module for Pivot Boss Masters.